This is the Definitely Uncertain podcast, brought to you by Goldrock Capital. Each week, we look at how high net worth families can improve their lives, decisions, and investments in a deeply uncertain world. We always aim to provide practical information, even if we can't offer specific investment advice. Welcome, everybody, to the Definitely Uncertain podcast. My name is Darren Rockman, and I'm a partner at Goldrock Capital, the 20-year-old multifamily office servicing families globally and in Israel. I am very pleased to have on the show today Carice Witte, who is the founder and executive director of Signal, the Sino Israel Global Network and Academic Leadership Organization. Carice is an expert on China and the West, and particularly China and Israel, and we're going to cover a whole lot of issues which are of interest to investors and to high net worth families today. So, hi, Carice.
Hi, very nice to see you.
Nice
now I can see you.
Nice to have you on. So, a little bit of background on why this is important. Clearly, the rise of China for investors globally has been a core issue. China has contributed outstandingly to global growth for the past 20 plus years, and has generated also a lot of changes in the global landscape through trade with the United States. And those movements seem to be going into reverse. And so what I wanted to look at firstly was what's the current status of US-China relations?
Well, problematic in a word. First of all, I want to thank you for the invitation. It's very interesting for me to be on a podcast with this kind of focus. It's a new experience. So I'll do my best in focusing on in the direction that hopefully your listeners will be interested. So the financial side of the conflict between the U.S. and China is ramping up by the day. We just heard in the last couple of weeks that the China's enormous state-owned enterprise, and it says CCCC, China Construction Company, has been put on the entity list, and they have subsidiaries all over the world, and they're all over Israel. They're involved in most of the Israeli infrastructure projects. Right now, there are no sanctions that are relevant for the corporation that apply to Israel, right? It's basically American companies that are not allowed. American governmental companies not allowed to supply it, and that doesn't apply here yet. What it is indicative of is this very powerful aim for reciprocity that Trump is pushing forward on. We all know that Huawei was sanctioned from semiconductors. That means that they will not be expanding anymore. They announced that they're going to stay more focused on existing markets. But because they won't have access to chips next year, who knows what can happen to them? And as a result, a firm called Oppo, which you may not have heard of, but it's another Chinese, like Xiaomi, you might have heard of. They sell here in Israel. So Oppo also does smartphones, and they're ordering 70% more of their phones from their manufacturers than they have in the past. So they're expecting to pick off some of the low-hanging fruit as Huawei is falling back in its success due to the conflict between the U.S. and China.
So this is one of the major flashpoints around sanctioning companies and stopping trade. What are the other flashpoints that you're seeing in the relationship between the United States and China at the moment?
Well, it's covering academia. There's a big concern, of course, at home in the U.S. that core research is the IP is being stolen.
Yeah.
So due to that concern, the U.S. government is looking for ways to protect, which equals limit. And that, when we look at Israel, there's nanotechnology cooperation between the universities here and in China. So that could have an effect on core technology cooperation in the academic field here. We see it also in how companies are looking at going forward. Many Israeli tech companies are self-censoring. They have been since the trade war started. And so basically they're saying, if I can sell in China and that's going to be my best market, I will go for investment from China, expecting that I can't go into the US market. However, if I ever want to be working in the US, I'm not going to do that. I will, look for other markets or see if I can target the US market, because the tension between the two countries is such that if you take money from one, you may not be able to enter the other.
So is that where we're going? Are we going towards a bipolar world where really there are sort of two economic blocks increasingly closing themselves off from each other, a US-led bloc and a Chinese-led bloc?
I would say that is unfortunately the direction it looks like things are going in. First of all, both sides, and I think the world has recognized, due to COVID-19, and we can't avoid its impact on everything, that people want to onshore their supply chains. And this just-in-time delivery, which was so cost-effective, is now a national security challenge or even issue. So everybody is going to look to see how they can guarantee their supplies, the things that are critical for them, closer to home. That's number one. Number two, the Chinese in general prefer not to count on outsiders. When Israelis would try to sell technology products to China, China generally preferred to buy the company and get the technology, bring it home, and have it be theirs, or the product, or whatever. They feel more secure that way. So you have the US not trusting China and wanting to separate. You have China not trusting anyone and wanting to separate. And they won't be able to, and they shouldn't, because there is an absolute benefit to integration, to globalization in a certain way. But everything, we're going to have to rethink everything, partly due to this conflict, partly due to COVID, and all of the troubles that it has allowed to rise to the surface. And I think that it's good for the world to do a big rethink. I just hope that the futurists and the great leaders do some smart thinking and take us in a better direction.
So when you hear from futurists and for people who are sort of thinking ahead, what does the state of the relationship look like 12, maybe 24 months out from today? I think that if we look back 2 years, we probably would have found it difficult to imagine the current world we're living in with masks and social distancing. So it's always a pretty difficult thing to do. But where are things going in that sense?
I am known to not fall into that trap of predicting.
Tried.
Well, let me say this. In the next 24 months, because it's not that far away, China wants and needs to reshape global governance to better suit its style of governance. The West does not want that to happen. It looks at some of the results of China's governance, such as Hong Kong and Taiwan, its interest in its one China policy and how it might exercise that, domestic issues in Xinjiang, and although China has been enormously successful in raising 800 million people out of poverty, the approach towards human rights, I would say, is very different from what we consider to be human rights. People might laugh when I use the word different, but it truly is. The Chinese say, think about 5,000 years of history where people had a very unstable future and they didn't have enough food. When I was in China in the 1980s, there was root vegetables and eggs and some tofu. In Hong Kong, anything you wanted, smorgasbord. But now, when in the 80s, when I was there, it was extremely difficult. I didn't go back until 2010 when I was starting to build Signal, and I was amazed to walk through these supermarkets and see everything from all over the world. I mean, this is a new world for the Chinese people, and that, having that is and jobs and improvement of the life of their children. So, this signifies the two very different approaches. I just want to mention on the business side, China has opened up its financial markets and its financial sector. So the big news is that Citibank is the first American bank to get a license to be fully owned in China. And Ant Financial on the other side of the Ant Financial, which is the payment system of Alibaba, they are going to go public. They're choosing not to have their IPO in the West. They're going to do it in Shanghai and Hong Kong, and it will be the largest IPO ever. And they're expecting no less than $200 billion IPO. And the Chinese regulators have allowed a Japanese investment firm to open up to get a trading license in China.
So we're not only seeing some type of bifurcation at the trade level, but you're saying also with finance and financial firms that we're starting to see maybe not a single core stock exchange in New York, but also having a second core in China.
Yeah, I'm absolutely, and an opening. China has talked about reform and opening up. They did a lot of it in the 70s, 80s, and a little bit in the 90s. And we've seen some kind of closing in the last 5 years, but they are working on certain areas to open their markets where they feel confident it will not damage their sovereignty. But I wanted to back to predictions. I think this is what's going to happen.
You are going to predict something. Come on, let's see.
I think that we're going to see this an existential need is going to push us towards onshoring. There will be an ongoing conflict in trade in a lot of different ways, in a tit for tat. Whether or not Biden or Trump wins, there will be an adjustment in approach. I am sure that Trump, because he won't be running for a third, at least we don't think so, for a third term, that he's going to make an adjustment in his approach. And Biden will definitely do things very differently. Nonetheless, there will be an ongoing process, because it's not only the US. Europe, it has now started to see the challenges, very, very steep challenges with China, doing business with China, the ill-level playing field, and how it's just not getting better. And so they're coming on board on their own, not necessarily in full sync with the US, but they're having a similar approach. So we will see that process continue on some kind of level. At the same time, China will adjust its policy because it's very tuned into, and it's quite impressive actually for the mammoth battleship that it is, that it can turn relatively swiftly. And so it will continue to make adjustments in political, diplomatic, economic, tech policies that will be both maybe tighter and looser to try to maintain economic growth and also ensure the ongoing centrality of the party, because that is, that's core for China. That is seen as the anchor of stability for the country. And as one who has studied China for many, many years, I have to say I agree. The party is the current only mechanism for the good management of China. Any thought, and I don't think anyone's thinking, about regime change for China, but no one should think about it, because they really do know what's good for them, and maybe having some adjustments in the way things are done would be welcome. But as far as the entity running the country, that will definitely continue and should.
Okay. So while we're on this question of Israel, you mentioned before Israeli high-tech companies sometimes having to choose between the Chinese market and US markets. What are the broader implications for what is the engine of growth in Israel, which is the high-tech sector? Is this split, this moving apart between China and the United States, going to have direct economic impact on Israel's tech sector, which is so important here?
I'm glad you asked that, because people have the feeling that Chinese money has become a make or break for Israel. And it's 12% of investments are coming from China. It is definitely significant, but not existential. So it's always helpful to have more money, but there's a lot of money out there, and there are a lot of markets that have not been tapped. Israel, and if Israel is compelled to or chooses to minimize Chinese investment, there are other markets such as Japan. Japan is a hugely growing investment source in the last 2 years. And I believe that we'll see more and more Japanese investment in the region. There's a lot of money in Southeast Asia in general. Israel is cultivating relations in South Korea. India is more of an arms buyer. I don't know how much they'll be doing tech investment, but there could be cooperation. And of course, I have to mention the United Arab Emirates. There's a lot of money there, and there's a lot of interest. They're also they're sharp business people, and if they see a good market, there's every expectation they will be here. This is the first warm peace we have had with an Arab state, and it's tremendous. We took a former parliamentarian from the UAE to China with us last year to participate in dialogues and briefings for China's political experts and policy advisors. And it was, so for us, it was really quite incredible when this development happened. And I see the people from the UAE the business people are already turning to Signal to say, how can we build cooperation? So if Chinese money is comfortable and it works, wonderful. If it's good for China, good for Israel, and it doesn't affect the US, great. If it does, Israel's lean and mean and will find new sources of funding.
Yeah, I hear. Okay. And finally, I want to finish off. We always like to finish off with some type of a tip for investors and for high net worth families. When people are thinking about building their portfolios, so I can tell you here at Goldrock, we have exposure to China, as I think many investors do. Is there any impact or direct line that you can draw from the situation you just described to what investors need to be thinking about when they think about their investments in China?
First of all, Chinese stocks are relatively inexpensive compared to US stocks. This is it's a growing market, and although China is very opaque, and I personally don't invest in China because I believe in long-term stability where I can see what's happening. In China, it's very difficult to know because rules and laws and protocols change quickly. But China is a great market, and it seems growing, and they are very serious about attracting investment. My advice would be to work with people who really know China from that specific angle, because China is it's a unicorn. It has a very different way of doing things, and it is so enormous and requires that you have a broad understanding, but also really specialize in that particular area. So if you work with people who really know how to manage the financial sector of China, I think probably you can do very well there.
Great. Well, Carice, thank you very, very much. That was really enlightening. And we really are pleased that you joined us here on Definitely Uncertain. And so it's probably not too early to wish everybody a happy Jewish New Year. And we'll be back next week. Thanks very much. And goodbye, everybody.
Thank you so much. It was a great pleasure. Happy New Year. Shana Tova.
Shana Tova. Bye-bye.